Everybody, this is Jim at sp500chart.com. It's Sunday afternoon, May 10th, 2020. We're going to take a look at this chart after I remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here at a 30-minute chart, this shows really the lows that we saw back in the latter part of March, our rally through April, and what appears to be potentially a consolidation area here lasting. Well, I mean, you could even say it goes back to the middle of April, and we have been in this thing for roughly 3 weeks of essentially sideways trading. But you can see here there is sort of a channel inside of a channel that looks like we did find support where both of these trend lines intersected, and that would have taken place on Monday of this week. So if you look at it as far as candlesticks go, we started the week near the low and we finished the week at the high. That would seem to be indicating that we will start this next week off, starting the 11th, with some upward momentum carried through from last week. You know, we talked about this being a potential cup and handle back here, and that would have a target up around 3170. That's this pattern right here. There's the big dip, there's the little dip. And now as we fast forward to the past 7 days, we have a little dip, well, in relation to this, a little dip and a smaller dip. That looks like a little cup and handle too. So let's just see if that's the way things play out. If so, then this small pattern would point us to a target of, let's call it 3,000. A hair above 3,000. And that would, I think that's certainly easily doable. And the fact is, we've got that other target. Remember, that's the one up here, around 3170. By the way, when we made that call, I'll remind you, the S&P was at 2646. And if you look at where we are now, we are almost exactly halfway there. So let's see if we can finish that up with getting that second half rally going to get us up to 3170. And if we can do that, well, let's first things first. So let's look at it like this. Small cup and handle, target of just over 3,000. Larger cup and handle, target 3170. And that's just sort of the outlook that I've got for this thing. I just want to share one more thing with you. I was thinking about this yesterday and the day before. A lot of people have been saying this is just, we should be seeing a major top here because of this coronavirus thing. But I want you to, I'm going to just leave this picture up here and I'm going to explain something. Well, I'm not going to teach you something. I'm going to share an idea. Normally, when you have a market top, that takes place because the markets have absorbed all of the investment dollars they can. There's a point at which there's just no more that can be absorbed, and the tide turns. The money starts to flow out. That's when you have the beginning of a bear market. I know people said that this was a bear market back here, but the reason they said it was only for one reason. It's because the markets were down more than 20%. But, folks, it wasn't and it isn't a bear market. What we are looking at, I believe, we had a market that was ready to get itself on up to over 3,800. Everything was in place for that. In other words, all of the pieces were in place. There was enough money outside of the markets to propel it to over 3,800. Then the coronavirus thing hit, and this did not happen because there was so much money in the markets, that it had to happen. This happened because of a fundamental news item that squeezed as much money out of the markets as it could. I think this is a totally reversible situation. I think this actually may end up propelling the markets higher in the long run. Obviously, we've got to keep an eye on it. We've got to watch it. But I just don't think the psychology was there for that 3,400 or roughly 3,400 for that to be a top. I just don't think it is. Now we've had a lot of excess. Well, not even excess. Now we have a lot of money squeezed out of the markets. And when the coast is clear, folks, it's going to come rushing back in. And that may be what we're seeing here. So keep your ear to the ground. And hopefully I'm right on that. But like I said, that's more of a hunch than it is anything having to do with the chart. But so far, folks, we're above this long-term trend line. I think this is a recoverable situation. I think we could surprise some people here. So anyway, look, I'm going to call it quits with that last comment. The moral of the week here is little cup and handle, target a little over 3,000, and of course that larger target up there at 3,170. So let's just keep that in mind going forward. Until next time, thanks for watching and thanks for your support.